My man, you sent me some numbers, right?
Yep, we've got the latest and the greatest from our local Central Ohio MLS, and this is everything through August.
Nice. I was wondering how this summer would go. How are we looking?
Good. So just like last summer, it was up and down. Things picked up in the spring. They were hot in the summer. And now we're getting to the end of it. We're starting to see things trail off just a touch. Things were down 6% month over month and year over year. A little bit of a cooling off, but still a bit of demand there. The inventory is at almost 3,000 houses, right? Which is about 1 1/3 months of supply. That's good. Still not enough to be a buyer's market.
Gotcha. So that is lower than last month, but it is significantly higher than this drop last year. And I think that has something to do with the interest rates, most likely. But it is towards the end of the hot season, looks like, and the list versus sold prices reflecting that as well, right?
Yeah, you can see that we've gone over the hump, so to speak. Things really heat up. You get a lot of competition. Prices rise. The really interesting thing about this graph is the convergence and the divergence of the two lines, right? Where people are listing houses and where they're actually selling. And what we're seeing is during the summer, both this year and last year, people were selling at on average above what they listed. And that's just a reflection of the level of competition, restricted supply. And now things are starting to cool off. So you see those two lines starting to separate over these last couple of months. That just means that people are pricing things the way they were a couple of months ago. There's less appetite for that for whatever reason. And now the average sale price is actually coming in below the average list price. Now, important to note, we're down 5% month over month, which is around $5,000. We're also up 5% year over year, right? So we're up $5,000 over last year's sale.
Yeah. So cooling down, but that's part of our seasonal cycle. Next one's actually a little bit surprising to me. Single digits above asking on the donut chart. This is the first time we've seen single digits in the above asking category since when? Last
Probably early this year. I think, yeah, at the beginning of the year, usually coming out of the winter. And that is interesting. The one thing that's changed that is maybe not as apparent is actually the blue section. Almost every month it's a third, 66 or 67%. And what we see trade back and forth is the percent over or the percent under. And what's happening now is it's not a straight push from the green to the orange. You actually see that that blue section expanded by a couple of percent, which is notable. So it looks like things are just kind of sliding down a little bit. Everything's shifting a little bit lower. And that is a departure from what we've seen in.
Yeah, that's a little surprising. Not too much if you think about it. We are softening a little bit. Still a seller's market, still a very strong seller's market, but it is softening from its highs. Again, that could be seasonal. We'll have to see how that plays out. Days in the market is starting to tick up just a little bit. That's pretty typical.
Yeah, and just a real quick point on the days on market. We're up and this goes over to the price reductions too. Compared to this time last year, we're up a couple days. But again, you look at the pattern, very similar. Things start to creep up after the low. And then August starts to tick back upwards. You see that happening also in price reductions. Same story, though. Our price reduction low point this year was not as low. Last year, we were 14, 15%. This year, we're at 17. And so things have hit that floor. They've started to rebound back up. It's been a nice, consistent line up from there. And so if you look across back to this time last year, we're up a couple percent above, but the trend is the same. So if we were betting, we'd probably say that September is going to come in at or above where we were in August.
Yeah, it makes sense. Part of our seasonal cycle again. And then the final one is actually the big news. This is the thing that could change our seasonal cycle a little bit, or at least soften the number change. And that is our mortgage rates are down to the lowest they've been in how long?
It was actually May.
Since May of 23. I see. It's great. Hopefully that continues to trend down. The Fed is signaling they will continue to trend it down. Keep in mind that's a average of all the rates available. 6.35 is not a rate that you get out in the wild. We're seeing just under 6.5 to 6.25, anywhere in that mix, and you're doing pretty good compared to especially 8% at our high, which was earlier this year, right?
Right. And, one of the things, just to put that into context, I mean, I think everyone's happy that we're down in the 6s and 7s, and now they've come down. And I think, like you said, it's going to open things up and bring some people back into the market. But what this really means is if you look at the average sale price for a home in our market last month at $394,000, the difference in your monthly payment, that 7.12% versus 6.35%, you're going from $2,100 a month to about $1,950 a month. that's something. That's about $150, $160 difference per month just in that change.
Yeah. So hopefully we see that soften up a little bit more. We'll see how this develops. Thanks as always for doing the numbers, Danny. And we'll see you next month.